Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. In today's program, I want to talk a little bit about more of a follow-on a little bit from this morning's broadcast in reference to the US midterms, and ask the question whether or not the market is getting a little ahead of itself. Plus some recent comments coming from a Bank of England member, and whether or not that was maybe a slight dig at another central bank. Plus incoming earnings from one of the biggest media companies in the world. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall it be taken as financial advice. I always suggest you do your own research, do your own due diligence. And of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So yeah, starting off really for part two of what this morning's video was about, because we talked a little bit about the midterms, because really that's what the market and the majority of the media is focused upon today, because there is chat by a couple of people that these results could fuel a bit of a rally. Now, to be fair, statistically speaking, the markets tend to favor when there's a gridlock. What do I mean by that? When basically there is not one overall party controlling both the House of Representatives and the Senate. When there's both, like I say, they're both. And the reason for causing a gridlock is because it's very difficult for the sitting president and his administration to get any of his fiscal policies through, because obviously he hasn't got the numbers in the Senate to vote for it, or the House to vote for it. So there is that. And a particular strategist who I talk a lot about this program, he said something recently, which I'm going to share with you now, from Morgan Stanley. And don't forget, this guy is being voted the number one strategist this year because he called the bear market, which we're currently going through at the beginning of the year. And I've said I talk about him a lot. And this is Michael Wilson of Morgan Stanley. He said this: a clean sweep by Republicans could greatly increase the chance of fiscal spending being frozen and historically high budget deficits being reduced. He also went on to say, this could fuel a rally in 10-year treasuries that could keep the equity market rising. Now, this is interesting because Michael Wilson, or Mr. Wilson, whatever you would call it, he's been a very, very big bear for a majority of this year, but he's beginning to change slightly in his recent comments. And like I said, he called the bear market at the beginning of the year. So he's beginning to change his tone slightly. And his target for, let's say, the S&P, he's looking around the 4,000 points. We'll have a quick look at it at the moment. Because and the whole market is sort of getting itself a little bit ahead of itself and excited about these midterms. Obviously, they're majorly important for both fiscal policy and for obviously what happens. So I understand it. But there's been so many sort of things coming out on comparing what the S&P done on back of these sort of like midterms. Now, average, and like I say, previous number is never the guarantee for what will happen in the future, obviously. But the S&P 500 performance has been gone up by the end of the year by 12.9%. If, like I say, we have that gridlock. If it's all Republican, then it's 8%. All Democrat is 6.7%. And on average, over a course of time, from the midterms, we get round about, this is from Bloomberg, by the way, 8.2%. 8.2%. And the question I have to ask, because obviously we've had a little bit of optimism in the market, mainly down to the fact that obviously we had a weaker dollar because of the NFP, though came in better than expected. When you look under the hood, it wasn't that good. The S&P asked the question, we can have the third day of gains. Hello there. I hope you're well. I hope you are. I hope you're having a great day. Good to see you. So we have the third day of gains. So let's have a quick look at the S&P where it is at the moment, because I do think we're getting a little bit ahead of ourselves, and I'll tell you why we are. So let me pull it up at the moment. Okay, as you can see currently at the moment, this is on a 30-minute. Okay, 30-minute. We're currently trading around 3,832 points. So again, you can see there is obviously a little bit of optimism in the market driving this. And if we have a look on a daily, like I say, the question we need to ask, are we going to see a third day of gains? Now, we have been looking, is above that Fibonacci ratio 23.6. So it's beginning to move higher. Tony, that leads me on to a great question. Thank you. I've got a brilliant question just come up. And this actually helps my point why I think the market's getting a little ahead of itself. I'll answer that in a second after we have had a look. But brilliant question. Thank you. Really good question. So yeah, we are trading a little bit higher. But again, I think some of this, yes, is the sort of like general feeling that the Republicans are going to get, the House and 50-50 in the Senate, which is a gridlock. So that's what's giving it a bit of a boost. But also the dollar weakness. But I'll answer Tony's question in a minute. Let's have a look at NASDAQ as well, because this is interesting. Because this is going to be something worth watching. This is again on a daily. NASDAQ could end on a third day of gains. Now, NASDAQ technically as well, if we do get a gridlock or a majority of Republicans, don't forget the Democrats are trying to put more tighter regulations on the big technology firms, which could slow down growth. So this is why the NASDAQ could get a little bit of a boost from these midterms as well. So this is why it's quite important. But look, if I'm going to answer Tony's question, because this is why I think the market's getting a little bit ahead of itself. And that's a really good question, because the chances of us finding out anything tonight is very unlikely, incredibly unlikely, because there's been a lot of posted ballots have come in, obviously, and they've only allowed to start counting. There's millions of these posted ballots, only allowed to start counting since 7 a.m. US time today, which is only a couple hours ago. So the chances of us getting an overall result today is unlikely. So realistically, this whole drive to this, we won't find out about this until most likely, or the results of this, till most likely after we get the US CPI reading, which is on Thursday, most likely. It might go on for days, so it might be till Friday. As well as that, if you get two senators or two congressmen who are very, very close, unless they get the 50%, over the 50% line, they would have to then do another elections again in December. And that's going to be the real thing. Bob, that's a good question. CPI report is going to come in cooler than expected if this rally is justified. I think you're right, Bob. I think you're right. Okay. Now, I'll tell you why this recent sort of like rally and why there's a bit more optimism. Obviously, this reading has got to come in a lot lower. I know the anticipation is about 7 on the year-on-year, 7.9 to 8%. Okay. That we might start seeing a little bit of a drop around that level. Okay. But as well as that, in my mind's eye, it's the core which is the key. We got to see some sort of dramatic move in the core, because don't forget, last time core came in at 6.6 when it was expected to come in at 6.4. Okay, expectation for the core on Thursday is 6.5. That is not a dramatic drop away down from 6.6. So I think you're right. We're going to need a real shocker for any means to justify this current rally. Because though the Fed, and it's being sort of priced in now, yes, the Fed's going to slow down the aggressive nature of their hikes, like a 50 in December, like 25 in January, potentially. They're still going to push across that 5% terminal rate, maybe even higher. So I think you're absolutely right, Bob, for this particular momentum. And like I say, this is why I think the market's getting ahead of the midterms, because we're not going to find out. The chances are we won't find out for a good couple of days after the CPIs come out. So that is the thing. But that's a really good point. That's a really good point, Bob. Really, really good point. And I do agree with you in many ways. And the other thing about this as well, I think, and I don't think I can't talk about this. Obviously, depending who gets in, they might put more pressure on the Fed to slow down, like a lot of senators are saying they need to slow down. But the Fed is an independent body, okay? And they've already said, despite facing criticism from other senators about them being too aggressive, they are dead set on getting inflation down to 2% target. They're absolutely obsessed with it. which brings me on to something else I want to talk about, which happened today. And I actually think potentially this is a bit of a dig at the Fed. And this was by Bank of England's Hugh Pill, who's obviously part of the MPC committee. Absolutely. Like I say, the lack of liquidity as well. Of course, again, this is something which I've always been talking about. I've always said, don't fight the Fed. And I keep, every time that there's a chance of a pivot or the market thinks there's a pivot, the Fed comes along and, blows their house down. It was only last week, and you've got a really, really good point here, Bob. Really good point. Only last week, don't forget, we had 75 basic point rate hike by the FOMC. Then we had a dovish statement, but then, poof, blows the house down with his press conference saying, yeah, okay, might do 50, might do slower, but we're going to get it above 5%. Very hawkish. And then look what happened to the market. Again, is any hope that we might get a pivot? They suddenly react to this. The only change to that, I think, is if the market then starts playing down recession concerns, saying that we're going to have a soft landing. That could be the only thing. But I think it's a really good point. I mean, like I say, look, I don't know if we've seen the bottom of this bear market yet. A lot of people are, like I say, Michael Wilson, who I respect greatly, he's thinking we're nearing the bottom. So I'd say, like I said, I'm not convinced. But anyway, really good point. But I want to go on to something what the Bank of England said, which is a bit of I think it's a bit of a dig at the Fed, because he said this, and he said, we're not meant to be inflation nutters. I love it. We're not meant to be inflation nutters. We are meant to sort of manage this trade-off in a way that avoids unnecessary, counterproductive, maybe disruptions to the real economy. Okay, and he goes on to say, he's skeptical that front-loading interest rate increases could bring about immaculate disinflation, meaning if we're really aggressive, inflation is going to come straight down. He's saying he's really skeptical that works. And we'll no real-world consequences addressing criticism that the Bank of England have been too slow. So basically what he's saying is a little dig at the Fed, I think. Because don't forget, the Fed keeps going, 2% target, 2% target, 2% target. Inflation. Bank of England embraces that they got a big inflation problem, 10.2%. Okay. They're also saying they're going to set to potentially fall into the longest recession since records began since 1920. But what he's saying about that, he's saying we're not like the Fed. Don't forget, Bailey said last week that 75 basis points, because the BOE did 75. The 75 is not the new norm. So he's playing that down. They're also playing that they are concerned if they're too aggressive with inflation, the actual knock-on effects could be devastating. Unlike the Fed, who are not talking about that. They keep saying the labor market's going to be fine. The labor market's robust. We can handle it. And there's going to be effect. So I tend to think that was a bit of a dig at the Fed. I really do. A bit of a dig. And obviously defending the Bank of England at the moment. Anyway, before I get on to the other story I want to talk about, and then we start looking at the markets, see how the markets currently stand, I want to share something else just as exciting with you, which is happening tomorrow. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning, showed some really good signs of volatility as well.
Anyway.
Join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School, your key to a better understanding of the financial markets.
There we go. Yes, indeed. Tomorrow is the next episode of the Tixee Live Presents the Trading School. This will be happening tomorrow, Wednesday, 6 p.m. UTC. Tomorrow's topic is something I'm quite passionate about, which I think needs to be addressed and needs to be talked about. And that is, it's called Mind Behind the Market, and that is the psychology of trading. And sort of helping identify what type of trader you are as well. So we're doing a special with that, obviously with my colleague Stefanos tomorrow. It's not broadcasted. It's broadcasted live. It's a live broadcast. Everything Tixee Live does is live, because live means live, but it's not going to be broadcasted on YouTube. There is a link for it. The link for the episode for you to register to come along and watch us is in the description below. So please click on that, register it, and I hope to see you there tomorrow. Yes, so what else is coming up? Disney. Yes, Disney's under the microscope. Their earnings today, and I think this is going to be really fascinating. Their earnings is set to be released their quarter three earnings unfortunately, after the market closes, which is pretty much the norm for a number of these big companies. Obviously, Disney, as we know, is a giant. Now, the company sees Disney Plus becoming profitable. Don't forget, the Disney Plus streaming service is yet to turn a profit, understandably, because they've invested so much into it. But they do eventually see Disney Plus becoming profitable by September 2024. And analysts are expecting we get a hint in this earning to predict Disney will add 8.8 million subscribers in quarter four. Don't forget, back in August, the earnings then reported a 26% surge in revenue. So it's going to be really fascinating to see Disney, especially because we're still in earnings season. This is still earnings season in full swing. It's still in full swing. And don't forget, Netflix was really impressive. How impressive was Disney? Because don't forget, last time Disney's overtaken them, is Disney still the leader or still leading the pack? So that's going to be really fascinating to see Disney earnings. Before we look at the market, I want to talk a little bit more about something else. Obviously, this Binance and FXDX spat is keeping cryptos on the edge. Don't forget that at the weekend, Binance did something. And basically, FTX, which is another exchange, their native coin, FTT, is down by 30%. And this is putting pressure on Bitcoin and the others in the family. Now, don't forget, like I say, their rivals, Binance, decided to liquidate its holding in FTT on concerns of how stable it was. So this is causing a real issue and real concern in the market. So it's in the crypto market. So let's have a quick look, see where we are at the moment. Let's start off with having a quick look, indeed, at where Bitcoin is at the moment. Because the Bitcoin, like I say, if we can go on the 30 minutes, we can see again today is under pressure. This is putting pressure on the whole crypto market in particular. Like we said, we dropped under 20,000. It did get, before obviously Binance started its spat with FTT, it did, on the back of the optimism from that NFP, get a bit of a boost, because don't forget, Bitcoin is considered a risky asset. But since obviously this drama is unfolding, it has come under pressure. It's currently trading at $19,365. So yeah, it'd be interesting to see. Realistically, it's been sort of range bound for so many trading sessions between 18,438. It did break above that key area of interest I've been watching at 20,355. It's now currently below it once again. So it'd be interesting to see if this pressure continues, because then I'll be keeping an eye on 1,848. Let's have a quick look, as we were talking about Disney, and see where Disney is at the moment as well. See where they are. My eyesight is terrible. There we go, Disney. Okay, so it's gone to 30 minutes, so we can see more of an action. Again, not terribly dramatic, obviously, because it's currently trading $100.95. Obviously, the market's going to wait. Like I say, the Netflix did really well. Netflix performed well. Expectation, the market is excited about this because they did very well back in the last quarter. Are we going to see some clear strength in Disney as well tonight after the market is closed? So that'd be interesting. Let's go over to currencies. Guess what? Guess who's above parity at the moment? Yes, the euro. Again, like I said, this is down to obviously anticipation, a little bit of the midterms, but I think they're getting over the top. This is more down to the fact that we're carrying on the momentum from Friday. We're above parity, currently trading at 10071. I still think, like I say, we need, I'm keeping an eye on 1.00089. Now, like I said, we stay above that and that changes its roles as a potential support, then maybe we might see the euro staying above parity for a little bit longer, maybe. But again, like I say, this is down to the falsehood of the Fed pivot, I think. So let's see how long that lasts. Cable is again above the 115 handle. So that's in a better place. Next level for me, if we can keep this momentum, an area of potential interest would be 1.16 145.87. Let's have a look at the dollar yen, because the dollar yen is under pressure. We're finally breaking out of that range a little bit. 145.40. So yeah, we're way under that trend line now. So like I say, we're range bound, but like I say, we are beginning to see the yen break back. Again, this is down to dollar weakness more than anything else. Gold. Look at gold. Now way above that key level. Again, really benefiting from dollar weakness. Net currently trading at 1,000. We're back above the 1,700 level at last. Currently trading at 1,713. The next real test for me potentially could be $1,726.48. So realistically, to me, it's all going to be down to that CPI reading on Friday. And those are the big events coming up, of course, because that's going to be a big one. US Consumer Price Index. I will be doing a watch along of that event, because potentially I think that could be a real barn burner. We've also got US initial claims, UK GDP, UK manufacturing production, German Consumer Price Index, US Midterm consumer sentiment. But for me, it's all about the CPI, the inflation. Where does that come in? Markets, US markets are currently standing, as you can see, they're all slightly in the green. S&P up 0.57%, NASDAQ up 0.74% currently, and Dow 30 currently up 0.93%. So yeah, I would say, look, potentially to set another third day of gains. Don't forget, you can always ask me questions whenever you wish. Or simply say hello if you like. Or share with me your opinions. You know, whenever you wish. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow around about 9:30 p.m. UTC, discuss the US session. And again, tomorrow, possibly, because obviously we've got the trading school tomorrow, possibly do a quick one round about 3 p.m. UTC as well. They'll talk about a little bit US, but really it'd be all about the trading school tomorrow as well. So please come along and join me for that. Big shout out to Tony, a big shout out to Bob for all your great questions and interaction. I really, really appreciate it. I really do. And a big shout out to all of you for coming along and watching my little program. I really appreciate it. Anyway, if there is no questions, not a problem. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this little video, find it useful and interesting, give me one of these. It's nice to know that you like what I do. Anyway, till tomorrow then. Till tomorrow. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, with the risks at hand before entering any trade. Till next time, every single one of you, trade safe.